Block Inc., the financial technology company powering commerce through Square for merchants, consumer finance through Cash App, and open financial infrastructure through Bitcoin.
XYZ generated $24 billion in FY 2025 revenue, but gross profit of $9 billion is the right lens, as Bitcoin trading inflates headline revenue at near zero margin.
The story begins in 2009. Jack Dorsey and Jim McKelvey co-founded Square in San Francisco after a mobile credit card reader insight. The NYS IPO came in 2015 at $9 per share.
In 2018, Cash App surpassed Venmo in monthly active users, then added Bitcoin trading. In 2021, Block acquired Afterpay for $29 billion and rebranded from Square to Block.
Under Dorsey's leadership, Bitcoin became a third pillar alongside Square and Cash App. BitKey hardware wallets and the TBD open developer platform represent Block's long-term infrastructure bets.
Cash App generates 62% of gross profit, driven by instant transfer fees, cash card interchange, and tax filing. Square contributes 38% through merchant transaction fees and subscriptions.
Block's revenue model benefits from two-sided network effects. Square merchants and Cash App consumers increasingly connect through shared products like Cash App Pay at Square terminals and Buy Now Pay Later through Afterpay.
Gross profit reached $8.9 billion in FY 2025, up 14% year over year. Adjusted operating margin expanded to 14% as Block moved from growth investment toward operating leverage.
FY 2025 gross profit growth accelerated in the back half of the year. Q1 2026 delivered a record $2.9 billion in gross profit, up 27%, as Square recovered and Cash App monetization improved.
PayPal is the largest digital wallet competitor. Venmo and PayPal Checkout have broader international reach. Block's advantage is the depth of the Square Cash App ecosystem and Bitcoin infrastructure differentiation.
Stripe dominates developer-first merchant payment infrastructure. Square competes on hardware simplicity, ecosystem depth, and the small to medium business segment, where switching costs from Square's integrated tools are high.
Block's moat is the closed-loop ecosystem, Square merchants and Cash App consumers on the same platform, with lending, payroll, and Afterpay creating switching costs that pure payment rails cannot replicate.
Square operates across the United States, Canada, Australia, Japan, and the United Kingdom. Cash App serves the US and UK. Bitcoin infrastructure through BitKey and TBD is available globally.
The United States drives the vast majority of revenue. International Square markets are growing as Block standardizes hardware and software across geographies. Cash App's UK launch is an early international consumer test.
Jack Dorsey co-founded Block in 2009 and has served as CEO since inception, also the co-founder of Twitter, now X. Dorsey has repositioned Block as a Bitcoin infrastructure company alongside its payment businesses.
Dorsey's defining bet is Bitcoin, arguing that open financial rails are the inevitable future of global commerce. That conviction drove the Afterpay acquisition, BitKey, and TBD as long-term platform investments.
Block, Square for merchants, Cash App for consumers, and Bitcoin infrastructure for the open financial system, $24 billion in FY 2025 revenue on $9 billion in gross profit.
Q1 2026 delivered a record gross profit of $2.9 billion, up 27%, and adjusted EPS of 85 cents, up 52%. Guidance raised. The full episode covers Square recovery and Cash App monetization.
Block just reported Q1 2026, and the GAAP numbers look ugly. EPS of negative 52 cents against a consensus estimate of positive 68 cents. A $1.20 miss. But gross profit grew 29% year over year to $2.9 billion. Today we unpack the split screen.
I'm Lana, he's Hudson. This is Charged Alpha. The ticker is XYZ. The company is Block Inc. And Q1 2026 demands a closer look than the headline suggests.
Here's the snapshot. Block reported revenue of $6.06 billion, up 4.9% year over year, but slightly below the $6.11 billion consensus estimate. GAAP EPS was negative 52 cents versus an estimate of positive 68 cents, a $1.20 miss. Gross profit hit $2.9 billion, up 29%, the number bulls will hang their hat on. Free cash flow came in at $935 million. Stock at $70.12, down 15% year to date.
Hudson, this is a company where GAAP EPS and gross profit tell completely different stories. Block management has said repeatedly that gross profit is the primary metric they manage toward. So the question is, whose scorecard matters?
Revenue of $6.06 billion grew 4.9% year over year. But the sequential story is concerning. Q4 2025 was $6.25 billion. Revenue fell $200 million sequentially. For a company positioned as a compounding growth machine, that is a yellow flag.
The gross profit story is the real headline. $2.9 billion at 48% margin. A year ago, gross margin was 39.1%. Block expanded it by nearly 900 basis points in 4 quarters. Gross profit dollars grew 29%, while revenue grew only 5%. Those two growth rates diverging this sharply means Block is repricing its business model upward.
The operating loss of $172 million is where the GAAP picture gets complicated. Block accelerated spending in Q1, infrastructure headcount, Bitcoin mining hardware, and Cash App product development. That investment appears on the income statement today. The payoff is expected in future quarters. Management called it investing ahead of the curve. The market called it a miss.
Free cash flow of $935 million is the counterpoint that demands attention. You cannot fake free cash flow. Block generated nearly $1 billion in FCF while reporting a GAAP operating loss. That divergence tells you the loss is driven by non-cash charges, not by the business consuming cash at an alarming rate.
Cash App, with nearly 57 million monthly actives, is the engine. Peer-to-peer payments, banking services, the Cash App card, and Bitcoin buying, all compounding. Square contributed steadily. Restaurant and retail verticals held resilient even as macro pressure weighed on small business sentiment.
The EPS history puts Q1 in context. Q1 2025 was positive 31 cents, Q2 88, Q3 76, Q4 dropped to just 18 cents, already decelerating. Now Q1 2026 swings to negative 52 cents against an estimate of positive 68. A trend that was already compressing has gone negative. Whether that is a buying opportunity or a warning sign is exactly what we are here to work out.
Let's make the bull case. Start with what matters most: gross profit. $2.9 billion in Q1, up 29% year over year. At 48% gross margin, a record for Block, the business is fundamentally more profitable per revenue dollar than at any point in its history. If gross profit is your scorecard, Block posted one of its best quarters ever. The 5-quarter gross margin trajectory, 39, 42, 44, 46, 48%, is the kind of sequential improvement that compounders deliver.
Cash App, at 57 million monthly actives, is a category-defining consumer fintech asset. The network is sticky. Users who adopt Cash App banking, the debit card, and direct deposit churn at very low rates. Cash App is not just a payment app. It is becoming a full-stack consumer banking alternative for underbanked Americans. That demographic, younger, mobile-first, underserved by traditional banks, is growing as a share of the workforce and has decades of banking relationship ahead of them.
Jack Dorsey's Bitcoin strategy is optionality the market isn't pricing in. Block has built Bitcoin mining hardware through its ASIC chip program, operates a self-custody wallet called BitKey, and holds Bitcoin on its balance sheet. If Bitcoin adoption continues expanding as a reserve asset and payment layer, Block is positioned as infrastructure, not just a transactor. The open internet thesis is long cycle. The market is priced for the next 2 quarters. Dorsey is building for the next 10 years.
The valuation case at $70 is also worth noting. Price to free cash flow at 13.6 times on trailing FCF of $3.2 billion is inexpensive for a fintech with 29% gross profit growth and 57 million monthly actives. Consensus analyst target is $95, 35% upside. The street's message: GAAP miss is noise. Gross profit trajectory is signal.
The bear case has teeth. A GAAP EPS miss of $1.20 is not noise. It is a 176% miss on estimates. The operating loss of $172 million signals aggressive spending with no clear timeline to profitability. Management calls it investment. Bears call it a broken model.
Revenue growth of 4.9% is barely above inflation. The sequential Q4 to Q1 decline is not consistent with a high-growth story. PayPal, Apple Pay, Venmo, and bank-native apps all compete for the same Cash App use cases. The competitive moat may be narrower than the bull case assumes.
And then there's the Dorsey attention problem. Jack Dorsey is simultaneously running Block and championing Blue Sky, his decentralized social media protocol. History shows that founder attention is a scarce resource. When Dorsey was split between Twitter and Square, Twitter suffered. The bear case asks, is Block getting the full Dorsey focus it needs at this critical investment cycle?
The most fundamental risk is the profitability timeline. Block is investing now for payoffs it projects later, but it has not given the market a concrete date for when GAAP profitability returns. With beta at 2.57, this stock amplifies market moves sharply. In a risk-off environment, Block sells off harder than the index. Investors need to be comfortable holding through significant drawdowns if the investment cycle extends longer than expected. And Q1 suggests that timeline is not short.
Competition risk is real and intensifying. PayPal processed over $400 billion in payments last year, dwarfing Cash App's volumes. Apple Pay integration into iOS and Apple Wallet gives Apple a structural hardware layer advantage that Block cannot replicate. Venmo, owned by PayPal, is deeply embedded in the same peer-to-peer demographic Cash App targets. If Cash App monthly active growth stalls at 57 million, or worse if it declines, the entire bull thesis loses its growth engine. That is the single most important metric to track next quarter.
The balance sheet is a genuine strength. Block holds $6.86 billion in cash against only $1.57 billion in total debt. Net cash position is $5.3 billion, one of the strongest balance sheets in fintech relative to market cap. Current ratio is 2.2. The company is not at risk of a liquidity crunch, and it has the dry powder to fund its investment cycle without needing to tap external capital markets at dilutive prices.
On valuation, price to sales at 1.8 times on $6 billion in revenue is compressed. EV to EBITDA at 15 times reflects the market pricing in the investment cycle headwinds. Forward estimates project Q2 revenue of $6.2 billion, with EPS turning positive at 42 cents. By fiscal 2027, the consensus models revenue at $27.8 billion and EPS at $2.20, which would imply a forward PE around 32 times at today's price. The key question is execution. Can Block deliver those estimates while the gross profit engine continues compounding?
Post-earnings options activity was heavily skewed toward puts, reflecting the market's bearish near-term reaction. The $70 strike saw elevated put volume, traders hedging against further downside or outright betting on continued pressure. Implied volatility spiked after the print, making directional options plays expensive. With beta at 2.57, Block's implied moves are wide by design. Long-term investors buying the stock here are effectively getting the fear premium baked into valuation.
On insider activity, Jack Dorsey retains a significant ownership stake in Block and has not engaged in notable open market selling. That matters. When a founder CEO is holding through a challenging earnings print rather than reducing exposure, it signals alignment with the long-term thesis. Institutional holders, including major asset managers, largely maintained positions through Q1. No significant insider buying was disclosed either, which is worth noting. If management believed the stock was deeply undervalued at $70, you'd expect to see opportunistic purchases.
The stock's technical setup adds context. XYZ is trading at 70.12, 19% below its 50-day moving average of 76.30, and 5% below its 200-day average of 74.10, 29% off the 52-week high of 98.40. The stock is technically oversold by most measures. Whether that resolves with a bounce or further breakdown depends on whether the gross profit trajectory holds in Q2.
The analyst community is sticking with Block despite the print. 26 buy or strong buy ratings, 12 holds, 4 sells. Consensus is buy with a $95 target, implying 35% upside. The consistent message, gross profit growth at 29%, is the thesis. GAAP losses are the investment cycle. Watch Q2 gross profit and Cash App monthly actives for the next signal. This episode is for educational and entertainment purposes only. Nothing discussed constitutes financial advice or a recommendation to buy or sell any security. Charged alpha may hold positions in companies discussed. All investments carry risk, including the potential loss of principal. Always do your own research and consult a qualified financial professional before making any investment decisions.
Ooh-wee-doo! That ticker tape starts dancing fast. A bull market thrill that's built to last. Dividends are ringing up the swing. Listen to that sweet ka-ching. It's a Wall Street swing. That fast-paced rhythm makes you sing. Yeah, the Wall Street swing.